Hello and welcome to another episode of Market Makers. And today we have with us none other than market veteran Shankar Sharma joining in to tell us what he's making of the market and what's going to make the market going forward. Shankar, always a pleasure having you on the show. Shankar, just wondering, looking at the ticker right now, the fact that we're just 5% away from that all-time peak, at least on the index. Small cap still a little bit far behind. Barring a few days of volatility here and there, Shankar, is the conviction still on the ticker? Do you continue to remain an India bull, and is it still a long-term romance?
I think back in June that the market is your best mehbooba, in my view, better than any human being, because she will throw a few tantrums once in a while. So if you can tolerate that hysteria, which we saw from Jan, right? I think till the first week of June. If you tolerate that hysteria, then there is plenty of euphoria ahead of you. And I think we have tolerated and survived the last 6 months of really hysterical times in a very negative way. And I think we are set for a great romantic affair with the market, especially people who didn't lose their shirts in that hysterical bout and are still in the game and batting at the wicket. I think this is a great time to be romancing the market.
But Shankar, is it also time then to cut all the noise and Mehbooba's tantrums each time there is some affinity to a global market fall or Jerome Powell's commentary or what have you?
No, so understand this, that blondes are always more problematic than the brunettes, right? I mean, and Indians by and large are dark hairs and brunettes. And so the blondes, the Barbaras and the Helens, I mean, both pareshan karti hain. Iसीलिए all my American friends keep crying for Asian wives, right? So forget about them. I mean, I think, the Indian end is much more secure, much more understanding, much more accommodative. And I think we'll stick to our comfort zone for now anyway. And I think Indian investors who are largely invested in India are looking forward to a very torrid affair with the stock market in India.
Shankar, torrid affair reminds me your torrid affair with the small cap end in India as well. That in some way, at an index level at least, has underperformed a good 15%. Whereas it's the seasoned, more mature large caps which are actually, running up ahead to that all-time peak. Why this underperformance, you think?
No, they did a lot of outperformance prior to that. That's inevitable. They are obviously smaller companies, more volatile, more tantrum throwing, but they give you a lot of euphoria also. So uh, sorry to say this, but I mean, everybody who ages always seeks somebody younger, right? So older women like younger men, or older men like younger women. You look at all tycoons; they get married to women half their ages. I mean, that's the way the model works. So we are also interested in the younger companies. The old ones are aging. They will do well. They're not bad. But I think if you live through the volatility, which is the tantrum bit of the small cap market, I think that's the place for sizzle, excitement, and a lot of money.
I don't know, for a second I didn't know where this conversation was headed. But yeah, now since we know your preferences about both women and stocks, let's move forward. Shankar, the one thing that has really come to the fore, and I think after almost 10 to 15 years, is Capex. We've had large conglomerates, small and big companies come out and talk about Capex expansion. They've talked about raising money for sizable 5 to 10 year kind of Capex in the times to come, and perhaps that's some reason why interest is getting back into cap goods as a space, but just wanted to understand the cyclical nature of it, that the fact a super cycle only comes once in 10 years. I wanted to understand whether this is a space you think one must now have an exposure to, or would you wait for some more evidence?
So I don't look at capex figures and all those things to make money. I mean, okay. So correction, I do look at those, but I don't look at it in a macro sense that India mein capex bahut badh gaya hai, hence it's a good time of the cycle. I don't believe in all that because that's too general, too top down to make any individual stock calls. If you think about it, large capexes are largely limited to very cyclical industries, so steel or metals overall or autos, I mean, stuff like that. And that people, unfortunately, most companies end up doing capex at the wrong time, most of the time, when the cycle looks good and not when the cycle looks bad. For some of our companies, they did the right thing when they acquired a lot of assets out of the bankruptcy courts. So the brownfield assets got snapped up by the Tatas and the Jindals primarily, and now you don't have much left to buy in the secondary market. So you have to go out and set up primary capacity. So that part, if you believe that they're doing the right thing, and you believe that steel is a great industry, by all means go and do that. I believe in my investing model that these are all cyclical industries. A good time to buy all these companies and a bad time. So Capex for me works more on an individual company basis and not a macro top-down basis. So I look at Capex numbers across companies on the models that we have, and I see in a number of companies that in the last 2 years, post-COVID, they did put up a fair amount of Capex. And I'm interested in those companies when I talk to them that why did you put up those Capexes? I mean, not all of them are doing sensible things, but a few of them are doing it sensibly. And those are the places you will go and make a lot of money, because somebody committing 100, 200, 500 crores of Capex must be having a plan. So we talk to them, we find out whether those Capex plans are sensible or not. And if they are, we go and buy them.
The most chanchal lot, Shankar, has been the new age tech companies. All their one-year lock-ins ending. We are seeing the stock prices sinking. Haven't seen a meaningful recovery in the most sought-after ones as well. They're talking the talk. They're talking profitability. I don't know whether they'll be able to walk the talk or not, but at least they are trying to understand what the market wants. Anything that looks desirable to you?
I don't understand why are they understanding this right now. I mean, for 150 years of stock market history, we know markets value earnings and cash flows and return ratios. Most of the time, the markets tend to forget these for a year or 2 years, like in the dot-com boom, or even in 2007, we forgot a lot of that in infrastructure companies. But that's like very fleeting. That's for a year or 2 years. Otherwise, markets by and large have the same metrics of valuation worldwide. Nothing has changed. So if these guys come and start saying that now we'll turn to profitability, what on earth were you doing getting listed prior to profitability? मतलब अगर हिंदी में बोलूं तो क्या समझ के रखे हो यार? The word starts with C and ends with an E. I mean, so that's the real thing here, that suddenly they're all thinking, oh, अच्छा हमें प्रॉफिट बनाना चाहिए, अच्छा हमें कैश फ्लो बनाना चाहिए. हमें तो किसी ने बताया नहीं. इतने बीसी इन्वेस्टमेंट बैंकर से कभी बात नहीं करते. सारे आईआईटी और आईआईएम में पढ़ के आते हैं यहाँ पर लोग. तो ये सब फालतू की बात है, that they will turn profitable and this that. Let's assume even if they do, they are grossly overvalued even if they turn profitable. So most of them are trading at, like, even if you assume a certain earnings coming through, they are like 200 300 times earnings 2 years out or 3 years out. तो किस बात का PE multiple आज हम दे देंगे 300 टाइम का यार? First of all, we don't know. Second, even if they become profitable, they're trading at 300 times forward earnings. It's ridiculous. So suddenly getting religion by all these new tech companies after they have pan out their mal to poor investors, I mean, I think that's a bit too much to stomach.
Even the price erosion, Shankar, doesn't tempt you? The fact that Zomato is as much as a kg of tomato?
I don't even know what is a kg of tomato in India, but even if it is so, I'd rather
it
buy
was
tomatoes
40 at one point. Yeah.
Okay. So I would rather buy tomatoes than the Zomatos of the world.
Okay. Got the message. Shankar, I'm just looking at a couple of your holdings, and what really stands out, the way you're going out, picking out in the unlisted space, and please correct me if I'm wrong here. Annapurna, Swadisht, I mean, I'm guessing an IPO would be in the pipeline, but you're clearly betting big on the urban India consumption theme here.
Yeah, that's a good question. So my view, and if you remember, Ayesha, when we had met last in the Bombay Economic Conclave show, right? When
Economic
you were
Conclave,
anchoring
yes.
the show with me and Mark.
In April, yeah.
Yes, correct. And I had mentioned exactly the same thing. I had not disclosed, but I had mentioned that whether macro big numbers come through or big companies do well or not, that's a different question. We can debate that endlessly. But on a micro basis, India is a collection of small countries and small markets where each, even if a company manages to address a small part of India, the numbers can be humongous. So like I'd mentioned, spices or snack foods. So they're regional companies, and Annapurna Swadisht is a regional company, making snack foods in the eastern part of India. And I'm not making a call that they're going to become, a lever. We don't even need to go there. But in their neck of woods, they are finding a huge amount of growth. And when, because they can offer smaller pack sizes, be more flexible than the big FMCGs because of, the cost push, they've upgraded the prices. A lot of factors are working in favor of smaller companies, taking away, chipping away, nibbling away at market shares of the biggies in their spaces. So if you look at India as a collection of markets, and there are smaller companies servicing a little one state or Eastern India, North India, South India, that itself is good enough to make a significant amount of money, because companies can go, as I mentioned back then, $25 million to $50 million in 2 years' time. 100% growth in a lever is impossible to even visualize in 5 years' time. So that's where the opportunity, in my view, in India lies. View it as a collection of countries like Europe, basically, and you pick companies which are servicing a country or two countries within the larger continent of India.
I'm wondering if there are any listed counterparts to business models like Annapurna that you already are vested in or looking at.
Oh, there are many, many, many. I can tell you this. I was telling my one of my analysts yesterday that given the wide variety of choices available to us as investors today in all shapes, sizes, industries, market caps, you have to do speed dating. Okay. You cannot like now go so deep into one company because there are so many available. And, therefore you need to form a certain method of speed dating a lot of companies and then coming to a short list of companies and putting on positions in a lot of them. So there are many. Annapurna is an unlisted company. It is going to be IPOing, to my knowledge, in the next few weeks' time. But leave that aside. Other than that, in the listed space, in the small cap space, a lot of small companies exist doing little niche businesses. Somebody's making some machine tools, somebody's making some engineering goods, somebody's making, even handicrafts or exporting to Europe. A lot of companies. I bought a company called Priti International, very interesting company, small Rajasthan-based company, doing some excellent work. So, and that's a listed company, by the way. There are many companies, many, many companies.
The other thing also, Shankar, which is, clearly a well-discovered story by now, but betting on urban India and their consumption trends, and it, goes from everything from your QSR space to even a Vedant fashion to a metro shoes, and the numbers speak for themselves, not just of the stocks, but the kind of earnings that they're clocking as well. Wondering whether slightly larger, again from the consumption space, whether these kind of businesses also are of interest to you, although as well discovered as they may be already.
So, from a personal investing standpoint, Ayesha, I'm not interested in well-discovered stories, because I've said this many times that I'm not entering the market on my personal investing front to make 15% CAGR. I'm not interested. That's too low, in my opinion, for a professional investor like me. It's good for mutual fund investors to target that, because they do not have the tools or the access or even the time to spend on figuring out more return generating ideas than beyond the 14-15% that on a long term you can hope to make. I'm interested in making 50% a year. In order to do that, I'm not going to be buying the large cap or the well discovered stories. You may well make there, but maza bhi nahi hai, kick bhi nahi hai, sizzle bhi nahi hai. It's better to go out seeking, call it the Tinder model, rather than figuring out that, okay, the comfort of a lever or comfort of a large bank. That's not of any interest to me. And of course,
Sure.
I agree that it's more problematic for a small investor to do that. But I think I also mentioned on that same panel where you were anchoring that even for a small investor who's prepared to gain knowledge, get his finance fundamentals in place, today the tools available are so many. You can run screeners, you can run models, all free of cost, or maybe 100, 500 rupees a month, and do a fair bit of work even without having one-to-one access to managements. And then you can attend conference call, read the conference call transcript. We all do that. So if anybody thinks that you're going to get rich without working hard, sorry, that's not going to happen. Okay. But the tools available to a retail investor are far better than what I have ever seen in the history of the world. If you don't utilize that, you have nobody else to blame. But if you do, I think you can easily beat the 15% return benchmark that most funds will give you.
So, Shankar, I mean, to put it directly, where is the sizzle in the market?
Sizzle in the market, Aisha. I mean, as I told you, I mean, it's like seriously sizzling market. Look at the tape. Look at the tape of the small cap market. Okay. And in fact, again, I tweeted this, I think, a month and a half back, that there was a lot of prediction going around, and I called them BHAP, which is big, hairy, amazingly audacious predictions. So BHAP can also be viewed as vapor, right? So my vapor-like prediction was, when I tweeted this, I think 2 months back, was that this is the absolutely the best time to buy small caps in India. I mean, we will look back 3 years from now and say that what a great opportunity this was in this period of Jan to June. And if you did not get in the bottom of the market or nearabouts, it's fine. I mean, like I always say, I mean, in a bear market, you can be too late because bear markets have typically very less room to fall. They can fall 20-30% in aggregate. Markets don't fall 50-60%, on 99% of the occasions, barring the 2008 crash. Otherwise, if you miss out a bear market fall, you're too late, usually within a few days. But a bull market, even if you get in 10% higher, 20% higher, it doesn't matter. And we are, like I said, we have a long romantic period ahead of us in terms of small cap investing. So don't even think too much about it. Run your screeners, buy a clutch of 20-25 names, and statistically, you will end up making significant money on at least 20% of them. That's good enough to make a good living.
Sure. Shankar, just tying in with the Capex theme that we were discussing, I understand that you're bullish on pipes and other building materials. Now, we all know what's happening within Indian real estate. And correct me if I'm wrong here, Supreme Infrastructure, I believe, is a story that you like.
Yeah, so you're referring to my investment in Rama Pipes, Rama Steel Tube. Yes. Yeah, I mean, I like this space. I was not lucky enough to have bought APL Apollo, which has been a great company, a fantastic performer in the last few years' time. But I mean, again, these are linked to the overall real estate, even government programs, access to water. I mean, the beauty of India is this, Aisha, okay? And I remember that I'm not making this up. When I was in class 8, okay, in our geography classes, okay, in one particular period in those classes, we were told that these are the statistics of India versus rest of the world. And there were statistics of wristwatches and bicycles and radio transistors and all those things. And I looked at that and said, ki, yaar, apna to hai nahi. It was like 0.001 bicycle per person, or half a radio per person, and Germany and West is like 10 radios. I mean, and I came back home and asked my father that, yaar, boss, this is like a one-way thing that India has to go up. And I'm not making this up. And this was back in, I think, early 70s when I was in mid 70s. And the same story is true even now. I was told that India only has 5% access to piped water in India as a country. And piped water means pipes. So even if you take that metric, hopefully that number, it's not going to go to 50 or 100% in our lifetime, but it can go from 5 to 10, which means that you're talking about a huge surge in capacities that are required to fill those, homes with piped water. Same is true for building materials, real estate. I mean, so even if you take a small, broadly, it's still a small industry, pipes. Even in that, you can see such humongous opportunity because we are so far behind global averages. So the headroom is just fantastic.
Shankar, last that we spoke, you were also a China bull. Now, with all the news flow around it, and I don't know how much of it to digest and how, but everything around the kind of power cuts that are happening, the fact that central bank is actually slashing interest rates, there has been inflation peak because of the drought-like situations that one is seeing across the region. Just wanted to understand, how is it that you're maneuvering funds, China versus India?
So here is the thing, that India has been the classical tortoise, right? And China has been the hare, and two very large countries, similar populations, neighbors. World is always viewed it in a binary, India or China, or India plus China, or whatever. Reality is that nobody can take away from the amazing growth that China has had in the last 20 years in particular. It's just off the charts. Okay. But of course, and this is an article I wrote in, I think, Business Standard in 2010, which if I find, I'll tweet it, was that it has come at the cost of, and now it's common knowledge, but back then it wasn't. It has come at the cost of massive debt built up. They've built up huge amounts of debt. They went from a 50-60% debt to GDP ratio of 25 years back to like 250, God knows, even might be 300%. So there's a huge leverage in the system which fueled their growth. India, on the other hand, has always been conservative in on the debt part of the balance sheet, and that comes out of our 91 crisis. So India's mindset has been that we need to be conservative, which is why India, by and large, has kept a lower debt to equity or debt to GDP ratio than China. I mean, we were running at for 10 years about 60-65%. Now it has inched up to 90 plus, I think, but still way lower than China's. So because you're conservative, you will never be able to grow that quickly as a high debt fueled growth country like China. But we all know debt can have its own problems, and that's exactly where the Chinese economy is when the leverage in the housing market is coming to haunt them. And then on top of that, Aisha, I mean, remember this: ultimately, a country is about its system of how it runs itself. And in China, we all know it's a communistic country, and we have seen that some of the decisions, and not to say democratic countries don't make bad decisions, but you're more likely to have worse decisions in countries where the power is extremely centralized. We've seen like the whole crackdown on tech companies. I mean, it defies logic. Why on earth would you kill deliberately your best global ambassadors? Alibaba has been a global poster child of China tech, or like a half a dozen other companies. Why would you? Jack Ma has been a great ambassador. Why on earth would any government want to bring down their biggest poster childs of how a new country has emerged from the old communistic framework to a purely capitalistic framework? Because all the episode of these companies getting crushed because of regulatory changes shows that you're still a very, very highly communistic country or regulated country where overnight some policy change can just kill your companies. I mean, all those factors have worked against China, and India in contrast, not to say we have all done good things in a policy, but relatively speaking, markets and capital seeks more comfort in somewhat predictable policies, and hopefully we should not get much shocks now from here on the policy front. And capital will move. It is like water. It will move to areas where best risk-adjusted returns are available. It was there in China, both in FDI and in FPI, and it is moving to India. And I don't see why that trend should change.
Couldn't agree with you more. So, Shankar, it's well established that India is your all-time lifelong girlfriend, but what's going to be a deal breaker for this romance?
Deal breaker for this romance can only be, in my view, a big policy misstep. Other than that, I don't see what can truly stop our companies. Again, I don't make a call on GDP growth and all that, and because all that is just up in the air, we have no idea. And I'm not anyway. We as investors, we can't buy or sell GDP growth. We can only buy individual company growth or sell individual company growth, right? So let's focus on companies here instead of taking big macro top-down views, because I think on a micro basis, like I said, an average Mr. Joe investor can also do as good a job as 90% of fund managers using the tools available. Please use it. And I'm telling you, this is the single best time I can tell you in the last 4 years to buy small caps in India.
Okay, always a small cap bull, and the romance continues. Shankar Sharma, always a pleasure having you on the show. Thank you so much for taking the time out.